Meanwhile, the International Monetary Fund has raised South Korea's growth outlook, but warns that escalating trade tariff tensions and global uncertainties could slow the recovery. Our Moon Hye-ryeon has the details.
The International Monetary Fund has raised its forecast for South Korea's economic growth amid pressure on Seoul to wrap up trade negotiations in Washington. In its latest economic outlook, the IMF now expects the economy to grow by 0.9% in 2025, 0.1 percentage points higher than its July projection. This is in line with forecasts from domestic institutions such as the Bank of Korea, but lower than that of the OECD's. South Korea's forecast for 2026 was maintained at 1.8%, with the country's finance ministry stating that this projection is interpreted to mean that economic growth will return to its normal trajectory next year. The IMF, however, warns that escalating tariff conflicts could hurt South Korea's export-driven sectors, particularly automobiles, and weigh on overall growth if trade tensions intensify again. Globally, the IMF raised its growth outlook to 3.2% for this year, up 0.2 percentage points from July, citing stronger than expected resilience in major economies. The U.S. economy is now projected to grow by 2% this year and 2.1% next year, while China's growth is expected to slow from 4.8% to 4.2%. The financial institution said the impact of U.S. tariff policies was smaller than initially feared, thanks to preemptive supply chain adjustments and new trade arrangements. But it cautioned that rising tensions between Washington and Beijing could once again weigh heavily on global growth.
This is more of a downside risk in a sense. This is what we have to think about what could happen if negative trade measures were implemented, if some restrictions on exports of critical materials were implemented. It illustrates the potential for the global economy to take a turn for the worse if trade tensions become more elevated.
It also pointed to the ongoing AI investment boom as a potential source of instability, warning that if the bubble bursts, it could echo the shock of the internet stock bubble bust of the early 2000s. Moon Hye-ryeon, ArirangNews.